Alrighty, everyone. This is Blue Vein with Profiteer Trading, and this is an impromptu lesson slash informative presentation on why beginners should consider to trade futures. So, if you don't know what futures are, they are like many of the other different products that are out there in the market. For example, you've got forex, you've got options, you've got equities, you've got treasuries. There's a whole bunch of different products that you can trade, cryptos. It goes on and on. And futures are just another category of these different types of products that people frequently will trade. So, what are the advantages and disadvantages, and why do I think it is an excellent place for a beginner to get started? Let's roll right into it. Now, beginners are typically low on capital, meaning they don't have a lot of money, they're tight on it. They're trying to save as much as possible to make sure that they can take the time off work to try and learn trading and adopt it as a potential new career. They're stuck under the PDT rule if they're trading equities. I know a lot of new traders that get into the stock market, they want to immediately get their feet in and start day trading, and they're ready to go, and they've got their MACD and their RSI, they're all set up, but they're stuck under the PDT rule, so they end up trading like a day trader, but bag holding positions overnight, and that liquidates them pretty quickly until they drop out. And as they're getting into it, maybe they're still working full time, maybe they're working part time. Either way, they have limited hours to trade. So, what are some of the advantages of futures? You obviously have extended hours. Futures are open overnight. They're closed for about an hour a day. They open on Sunday at 6 p.m. Eastern, close Friday, or Friday night they close with the rest of the market, and Saturday they are closed. The rest of the time they're open. If you are in any part of the country or the world, or if you want to trade at nighttime, those are totally different available options to you, unlike something like the stock exchange. Right now, you've got no PDT rule. There is what's called margin requirements, which means you need to have a certain amount of money in your account to trade specific products. It varies by product. And there's a day trading limit and an overnight limit if you want to be trading specific products. However, having no PDT rule really opens up the gates for someone who is low on capital and doesn't have the 25,000 but wants to trade intraday. It really opens up the gates for you to be able to do that. Now, there are tax advantages if you get to that stage. There's something called the 40-60 rule. So if you're interested in that later down the road, you can look it up, but I'm not going to go too far into the weeds with that. Now, you have less manipulation. With some equities, you can totally notice that there can be manipulation at points in time. And that's not to say there's no manipulation in the futures market. However, most of the products that you're going to be trading are so liquid that it makes it hard for any one actor to control or manipulate that market. If you're talking about the E-mini S&P 500, that's one of the most traded vehicles on the planet. So for any one person to get in there and think they can manipulate it is far from reality. Now, this is more of a personal opinion of mine, but amazing education. From what I've seen, the educational material that's put out for free by people like Simpler Trading, Axia Futures, Jigsaw, all these guys, they put out amazing content that is real professional trading content compared to what I've seen with, say, equities. I haven't done much of my due diligence and research, but when I look up different equities education sites, regardless of what it is, there's a different standard set. And you also have tools that typical charting platforms you're going to have with equities don't have, specifically order flow tools. Obviously, if you're using something like Thinkorswim, they don't have time and sales. You're not going to be able to get some of these advanced, delta, cumulative delta, footprint charts, heat maps, finding liquidity. All of these things are not available if you are using a standard retail platform. Micros. So one of the products I mentioned earlier, the E-mini S&P 500. Now, what the CME Group, which is the kind of the equivalent of the New York Stock Exchange, if you want to use simple comparisons, the CME Group, the Chicago Mercantile Exchange, they're the ones that create a lot of these futures products and regulate them. And they came out with these micros. So there's an E micro S&P 500, E micro Dow Jones. And what they allow you to do is get involved in the market with limited risk and limited capital. So I believe with a lot of brokers, you can fund an account with $50 or $100 and trade one micro contract. And that's going to be on the E-mini S&P 500, for example, a $2.50 realized or unrealized profit or loss per increment up or down on that product. So it's a 25-cent increment. So if you go and you buy at 3,000 and you sell at 3,025 cents, that's going to be a $2.50 unrealized, or at that point realized profit loss on that one contract. And you can get involved with something like that with only $50 to $100 and trade it as many times as you want throughout the day. Again, no PDT rule, no 3 trades per every 5 trading days or whatever you got going on there. So they're really the best product, I believe, out there for beginners to go from sim trading to scale into micros, build that mental framework, build that psychology, and eventually scale into a full-sized mini contract and go from there. Now, some of the disadvantages, obviously, we just had that big boom of all the brokerages coming out. Oh, commission free, commission free, commission free. That didn't happen in the futures world, and I think that's for the best because you're going to start to see decrease in performance from the platforms with these brokerages. They're going to have to compensate the cost in customer service, order execution. They're going to start routing your orders through latent services to provide liquidity to the market and get paybacks for that. There's a whole slew of potential issues. So I'm A-okay paying these small fees to make sure I get a solid, accurate, fast data connection and no one is trying to intercept my orders when I submit them. Now, leverage can be tragic if you do not manage risk. So because you do have leverage embedded in the contracts and there's an underlying value for these contracts, if you have a micros account with $150 in it, you can get to the point where you have a margin call because you day trade a contract and all of a sudden, for whatever reason, you don't have a stop loss and you could find yourself in the negatives where you owe money from that account. So basically, as long as you trade with a stop loss and you know the basics of managing risk, you'll be fine. And if you even think about trading with a live account, you better have sim traded for at least a few months. So that whole wheelhouse should have been taken care of before you even think about putting live capital on the line. Now, the contracts, this is kind of a learning curve. It's not, oh, how many shares do I want? And, what percentage is going to do to this and this? It's contracts have underlying value and they have a dollar per point, dollar per tick type of setup. So, for example, crude oil on the New York Mercantile Exchange is a $10 profit loss for every 1 cent crude oil moves, right? So that's per contract. So it's a different way of looking and managing your risk. You're not going to find yourself buying 500 contracts of the E-mini S&P 500. That's like what institutions are doing. So it's not like a share. It's nothing like a share. It's a contract with an underlying value. And you can go on the CME's website and look at the contract specs, and you will see what the price increments are and what the underlying value of those contracts are. Now, limited selection, I say, because it's not like the stock exchange where you have thousands and thousands of options. And this is, for me, it's a pro, but for some it may be a con. I like focusing on just 1 or 2 markets. I think that the stock exchange can be very, very distracting and overwhelming when you have so many different options and you don't really know which one you should be focused on. And SMB uses the term "what stocks are in play." you don't really have to worry about that. You're going to be limited to a specific finite amount of products, and based on your liquidity needs and what kind of markets fit your personality, you will fine tune that down the line. So, if you've heard all this and you're interested in learning more, getting started, first go to the CME Group website, check out the contracts, look on YouTube. There's a ton of amazing videos on what are futures, how do you understand what the contracts are, what are you actually trading, and the basics are you're going to need a clearing firm slash a broker. So for me, I'm using AMP Clearing. By no means is this a recommendation. This is just I'm just letting you know who I'm using. So you can go to their website if you want to see what I'm talking about. You know, there's other ones, Tradeovate. There's a whole slew. You're going to need a data feed, and that's going to be what you're actually putting your orders through. So if you have CQG data, when you place an order, it's going to go through CQG, through the clearing firm, into the market itself. And paying for that feed, you're going to get a dedicated line. You're going to get better price reads, quicker, more accurate, with time and sales compared to something like Thinkorswim, which can have its own latency issues. You're not getting time and sales, and it's just a superior product as well as faster and better fills and execution. So it's well worth the cost. Finally, you're going to need a charting and execution platform. This is very, very broad. There's a lot of different places you can go to find this kind of solution. I am using Sierra Charts. There's a ton out there, Investor IRT or RT. There's multi-charts. There's seriously, there's a very wide spectrum of very, very good charting packages, and almost all of them are going to have better features and more advanced features than the typical retail stock platform you're using, you know, E-Trade or Thinkorswim or whatever else it is. Now, if you are interested in trading futures, here are some key things before you even think about any of it. Go study, get into the nitty-gritty of at least these. This should be nowhere where you stop. This should be just the beginning, just some subjects, some keywords to look up. Auction market theory. Understand what that means. What is it? What is value? How does value migrate? Understand what market profiles are and volume profiles and how you can use them. Understand how to read price action and order flow. How to look at an auction and really tell what's going on. What is the market condition? And derive context and narrative. You really need to have a solid structure and a solid methodology before you're going to put any live capital on. You should be able to define what opportunity looks like, what are your risk parameters, how much are you willing to risk to find out if a trade's going to work in your favor. Do you have that psychology, that mental framework? All of these are crucial components that you need to have in your own trading methodology before you ever consider putting any live capital on. But that's a whole nother video. This is just about futures products and why I think they are an excellent place for beginners to start, specifically with the micros. Go look up the micros. They're awesome. All right, so I hope you enjoyed, I hope you enjoyed this and learned something, and I will see you all in the morning recap tomorrow morning, or the morning prep. All right, bye-bye.